Good morning, everyone. My name is Sriram from the Commodity Research Desk at Reliance Securities. Welcome to the weekly commodity updates. Starting with the bullion side of things, international domestic gold and silver futures gained earlier in the early part of the week after the dollar eased after the Fed left the target for the fund rates unchanged as expected. However, after the initial rise, the dot plot revealed that the Fed is seeing rates higher for 2023 at 5.6%. In the March meeting, the dot plot revealed that the Fed was expecting around 5.1% will be the peak for rates. So this was slightly on the hawkish side from the market perspective. Upward revisions were also made for 2024 and 2025 on the rates. So this pulled the prices significantly lower from the highs of the week. On the inflation expectations as well, the Fed also revised the core PCE price index numbers to 3.9% higher from the March projections of 3.6%. So this ought to lifted the dollar and kept the treasury yields higher and weighed on sentiments for bullion this week. Looking ahead for the coming week or so, the key trigger will be the US Federal Reserve Chair Powell's testimony in front of Congress this week on Wednesday and Thursday. The language will be keenly examined and will impact the markets in the short run. After the testimony, we have the Bank of England meeting where it is factored in that the Bank of England will hike by another 25 to curb higher inflation levels. But again, like the Fed language, the Bank of England language will also be keenly awaited going forward. On the charts though, so we feel that the MCX August contract will remain within 58,400 to 59,900. And on the international side of things, we feel COMEX August futures can remain within a broad trading band of 1925 to 1985. Moving on to crude side of things, internationally and domestically, crude prices rebounded from the lows of the week after a jump in refinery runs in top importer China. Data show China's oil refinery output or throughput, I should say, rose 15.4% in the month of May, hitting its second highest total in the record. Additionally, Chinese central bank also cut the medium and long-term facility rates by 10 basis points in over the last 1 week or so to boost the economy and also push prices higher. Lending further support to oil prices was a fall in supply after data showed that US oil rigs fell further 4 units in the last week to 552, and it's actually the lowest since April 2022 and lent some support to the markets. For the week, we see crude oil prices remaining elevated, but the key trigger for crude oil prices will be the US Fed Chair Powell testimony tonight. After the speech, we feel that the weakness over the overall global economy and prospects of further interest rate hikes by several central banks will be negative for the markets going forward. If several global central banks continue to remain hawkish, then we see further correction for crude oil prices. Demand concerns remain in the market as slowdown in China continues to hamper or dampen demand, and that will be also one of the key reasons why upside can be capped. Last week, the CNPC, the country's largest oil and gas producer, cut its 2023 Chinese crude demand estimate to 14.8 million barrels per day from its initial or previous estimate of 14.86. So weak demand concerns persist, and that will be also a key driver of the markets. Apart from that, on the supply side, we feel inventory data this week would also have a major impact. The API and the official EIA data are due this week, and that will be also a key driver for the market. So on the charts, we feel NYMEX July contract can remain within a broad trading band of $70 on the lower side to 75 on the upside. Domestically, we see a range of 5750 to 6000 in this week. Finally, on the base metal sector, copper and other base metals recovered this week as China cut rates to provide stimulus to the economy. Looking ahead, we see that the key trigger for the base metals will be the Fed Chair Powell's testimony tonight on Capitol Hill for cues on the interest rate trajectory. However, after the Fed Chair Powell testimony and other several Fed speeches, data will be key trigger. Investors will be keenly awaiting the next batch of Chinese numbers, which includes the surveys of PMI, going forward in manufacturing and services, and that will be the key factor driving the markets. Again, the worry for the base metal traders will be the lack of further stimulus from China, as they fear that they will be worried about inflating the property prices, which has remained high in that country. So lack of further stimulus from that country could cap further upside for the base metal sector. So looking ahead in the coming week, on the charts, we feel the MCX copper June contract can remain within a broad trading band of 715 on the lower side to 745 on the upside of things. So that's it from our side. Thank you very much for listening. Have a pleasant day ahead. Thank you.